Hello everyone, this is Royston over here, the resident SMT options coach. Today I'm doing this very short video for you guys to talk about oil, which is basically one of the hottest topic over the last couple of days. As you can see from the screenshot over here, basically there was some surprise news and that actually led to oil prices leaping 6%, which is basically the largest increase over the last 1 year. And the news that basically drove this oil price or significant oil price jump is that of OPEC Plus essentially cutting their output target by slightly more than 1 million barrels per day. So that's actually pretty substantial. So essentially this is basically a concerted effort by this small group of oil producers to basically try to, I would say, I wouldn't use the word manipulate oil, but basically to provide certain support when oil prices actually hit the $70 barrel. And you can see that oil price actually leapt up pretty significantly, and now Brent prices is trading closer towards the $84 barrel at this point of time, and the Wall Street is basically forecasting that oil prices for the rest of 2023 potentially we could be hovering somewhere closer to the $100 per barrel level. Now whether or not that's going to pan out again, this is something only time will tell, and oil has really been pretty volatile of late. So a lot of expectations for oil prices to actually trend higher above $100 per barrel. Some say $110, $120 per barrel on average for 2023, but so far for the start of the year that actually did not happen because of all the risk on mode in terms of talks of recession, which is not really good for the economy, and therefore demand for oil is expected to actually come down. Now, whether or not oil prices would actually go higher, again, that's something that only time will tell. But today in this short video, what I would like to do is basically to identify for you guys some of this oil related stock that is most exposed to oil prices movement. That means if oil price actually will to increase significantly from the current level of about $85 per barrel for Brent crude, if it does actually increase another say 10, 15, 20%, how would that actually affect some of this oil related stocks, or which of these oil related stocks is going to see the most significant increase in terms of prices? So that's basically what I want to be doing here for you guys today. And what I've done is essentially to use the stock roller platform, which I've highlighted to you guys not too long ago in a separate video talking about how to screen for some of these strong sectors, strong industries. But today I will not be actually going into detail how I actually use to screen it. I will actually do the hard work for you guys. So I have already prepared, or I've already screened out the candidates, and I'll just briefly go through. But you can see over here that the market movers for last evening, essentially out of all the top 10 candidates, almost 8 to 9 of them are oil related plays. So the largest increment in terms of one day performance is Marathon Oil. Now, is this company going to be the one that has the largest, I would say, beta or correlation to oil prices? If oil price is to increase like 10, 15, 20%, what's the kind of expected return that we should be expecting for some of this most leveraged oil plays? So that's basically what I want to be going through with you guys today. And so there are 3 key things that I want to be looking at. So one is basically what are the stocks? Which are the stocks that is most leveraged to oil prices? So that's something that I want to be highlighting to you guys. Second one is basically, is it the right time to be entering into these stocks at this current juncture? So now we talk about the timing factor. Okay, and that I will bring you back to using the Traders GPS platform again to highlight whether or not at this current juncture some of these highly leveraged oil plays, are they potentially good counters to be entering at this point of time. And last but not least, the third portion will be how to structure it. What's my preferred way to actually structure it? And since you guys know that I'm an option coach, right, a lot of times when it comes to executing on this kind of, I would say, more volatile counters, I tend to like to execute using options to lower my risk. How do I do that? Later I'll actually show you. Okay, so let's talk about which are the stocks that is the most leveraged. So I've already prepared this Excel spreadsheet, which I will also upload alongside the video for you guys. So if let's say you guys are actually interested to just do a little bit of your own studies and whatnot, feel free to actually add on the list and do a little bit more evaluations. But what I've done is basically I've actually used the Stock Rover platform to actually compile this list of stocks. So these are the S&P 500 stocks, mostly from the S&P 500. So those oil-related counters that's not within the S&P 500, I actually did not include in this list. So you can actually include it yourself if let's say you want to do it. But what I've done is basically to first identify which are the periods whereby over the last, I would say 3 to 4 years, over the last 3 to 4 years since 2018, which are the periods whereby there's actually a significant increase in oil prices. So I look at the oil price chart and I actually break down into certain periods. I can identify 5 periods whereby there's actually a jump in oil prices. So this are basically from 24th December 2018 to 24th April 2019. That's period 1, and then of course there's period 2, period 3, period 4, period 5. And what you can observe over here, I've also highlighted the duration from roughly trough to peak. Now the duration is roughly about 3 to 4 months. So this is not something that is going to pan out for a long duration, or this is not going to be a trade, I would say, which we are going to execute for 1 year or 2 years. Potentially, oil price can continue to trend higher, but what we want to do is be pretty opportunistic over here. And we want to be identifying, okay, typically from trough to peak, oil prices typically takes about 4 months for that scenario to pan out. So that again affects how I am subsequently going to structure my options related trades later on. So now you know that from trough to peak, roughly the duration is about 4 months during this 3 to 4 months period. And how have some of these oil related counters performed? So again, during those periods, I track the performance of the individual oil related counters. So these are the tickers, tickers of the oil related plays in the S&P 500. And you can see some of them have performed pretty well over this pretty short duration. The best performance during the first period is actually HES, which actually generated a return of roughly about 59% during this very short 4 months period. So I did the same thing for the subsequent 4 periods, right? All the way to period 5, I evaluate the price performance of all these counters. Of course, the one with the largest increase in terms of price performance, that period is period 3, whereby there's actually a huge jump in terms of oil price during this particular period, 2nd November 2020 to 8 March 2021. Okay, so that's basically, there's a huge jump in terms of oil prices, and you can see that quite a lot of this oil related plays see significant increase in terms of their prices. The largest one being that of Oxy, 226% increase in its share price during just this 4 months period, followed closely by FANG, Diamondback Energy. Okay. So what I did is basically to compile all this data, and then I look at the median number. So this table basically is sorted by the median, from the largest median number to the lowest, and then I also want to take into consideration what's the average. Okay, so median is basically just to take the central figure over here, and the center figure over here is this number. Okay, now the average over here is taking the average of this. So I also want to compare both the median and average, and you can see that there could be some large discrepancy between median and average price performance over here. So you're going to make a judgment as to which is the stock that you might want to be looking at. But again, I think there's potentially good candidates which I'll be highlighting. So I've screened it, or basically I've sorted it based on the median price performance, and the one with the largest median price performance is actually HAL, Halliburton, which is the oil service company. Oil service company followed by Apache, APA, and then Devon, MRO, Oxy, PXD. So these are all sorted by median, and essentially I also have the average figure over here. So what you want to see is basically a median figure that is pretty close to the average. So you can see over here that Halliburton has a median return of about 67% during this 4 months period, 3 to 4 months period, whereby oil price actually have a sharp rally. Now, its average price performance over this period is also pretty high, 66%. So this is definitely a stock that will be on my list of counters to be entering in to play the oil price rally. Now, coming down, Apache, median 64%, average return 78%, also pretty decent returns. Okay, and then you can go down the list and see, basically the bottom of the list, these are counters which are not that leveraged, so to speak. So if you don't really want to be focusing on these stocks, that's fine as well. Some of these are the bigger cap stocks which might not be as, I would say, volatile as some of the smaller cap names. Okay, so maybe you want to be focusing on some of these plays, but do note that these are definitely higher risk plays. Higher returns come with higher risk as well. So if the oil rally did not happen, you should expect that potentially some of these stocks, the drawdown might also be quite significant. And that's why I want to be protecting myself using options in terms of not risking too much capital. Again, I'll talk about that later on. So now you have got a good list of candidates over here, some of the top 5 candidates that you might want to consider. Interestingly, some of these candidates like Fang, for example, doesn't really score that well on a median basis, but on an average basis, it's actually one of the highest. So again, this could also be potentially one of the consideration over here. I would think it's pretty decent as well, Fang. A stock that currently I'm holding using options as well. Now, once we have identified the stocks to be looking at, the next segment will be looking at timing. Is it the right time to be getting into stocks like Halliburton, Apache, Devon, MRO, etc.? Now, that's where we turn to our Traders GPS platform. Okay, Traders GPS platform. So we go over to the screener and you can screen using NYSE. So what I've done over here is that I've been screening based on the sector basis. So I'm looking at it, basic materials, communication service. So all this I'm not looking at. I'm just focusing on the energy sector. Right, energy sector, and I'm looking at which are the stocks that I can be looking to enter at this point of time. Now you can see that for the energy sector, almost all of them are having positive buy signals. All right, generally more on the positive side. So this is naturally the case, but if you were to actually look at the mode, it might not actually be telling a similar story. Some of them are still in bearish mode because for quite a while, at least for the start of the year, energy related counters have been pretty weak. So now we are potentially seeing a rebound. Whether or not this rebound is sustainable, again, time will tell. But we want to be positioning, or we want to be taking on a little bit of calculated risk, so to speak, and positioning ourselves in some of these energy counters in the event that oil prices does indeed rally substantially from the current $85 level. Now, we have already identified a few of those stocks earlier on that is in this list. So let's take a look. Maybe let's go down the list. Halliburton. Okay, Halliburton. Let's take a look whether or not we can find Halliburton stock. HAL. Okay, HAL. Let's come down and see if we can. Okay, I missed it. Must be somewhere around here, but I'm just scrolling. Okay, Halliburton over here. Now, there's actually no signal and it's still in bearish mode. We can actually quickly take a look at its chart. So this is one of those stocks that is highly leveraged to oil price movement. So you want to be prepared for it. But is it the right time at this current juncture? No, I don't think so yet. It is still having red candle, so not yet changed to blue, and there's no green arrow with teeth signal. So definitely this is a stock which will be on my watch list, but not the right time to be executing at this point of time. Now moving on to APA. Okay, let's take a look at APA. Let's find APA in this list. Are we able to find APA? Okay, let's scroll down again. Well, can't seem to find APA. Okay, never mind. Later when we spot APA, we will come back to this again. At this point of time, my eyesight a bit screwed up, so cannot really see. Okay, not here. Okay, never mind. Maybe it's in the Nasdaq side. Now next one, let's move on to Devon. Okay, Devon Energy. Devon, is it here? Okay, here, Devon Energy. Now, 0, no teeth, no arrow, bearish mode. Let's take a look at its price chart. Again, this one is turning blue, but there's a gap up. Now we want to be waiting for that signal. So we don't want to be overly hasty at this point of time, like entering over here and then subsequently it changes candles again. So you want to be waiting for a positive signal at this point of time. So the Devon Energy, also one of those counters which is highly leveraged to oil price, but again, not the right stock to be entering at this point of time. MRO. Let's move on to MRO. Let's see, can we see where is MRO? Okay, MRO over here. There's a Trader's GPS buy signal. Thief 1, arrow 1, bearish mode. Looking quite interesting. Okay, looking quite interesting, even though it is still on a bearish mode. But yes, we could be a bit early over here. But this is potentially one stock which is now definitely on my radar, and I could be looking to execute this counter if it does give that positive break. So again, I do not want to be too hasty. I want to be waiting for a positive confirmation, which is basically breaking above the last high at the 26.6 level. So the last close was around 26.3. So not very far away from this last high price. So if the market actually opens higher above 26.6, that's basically where I'll be looking to take a position in MRO. So this is one counter which the timing might be right. Right, among all the list of stocks over here, this is one counter whereby the timing at this current juncture might be right. So again, quite interesting. This is one stock that I'll be keeping a close look on and definitely monitoring its performance. Okay, so this is a right stock at the right time. Okay, let's do a final one, Oxy. Let's see whether or not we can find Oxy over here. Oxy, okay, Oxy over here, Occidental, one thief, no arrow, bearish mode. Again, let's see. So again, Oxy is a special stock, okay, a special stock that has been in the headlines of late because Warren Buffett has been actually increasing its stake pretty aggressively when the share price was somewhere around the $60 per level. And this is something which I highlighted to my option students, and we have actually executed some option trades on this counter when the price was actually around $60. So some puts generate some income along the way, and now there's actually a good bump up. Okay, a good bump up, and the price is at this point of time, the candlestick has changed to blue, but there's no positive signal at this point of time, no green arrow with TIF at this current juncture. But this is again a counter which is looking pretty interesting, and I would say that if it actually trends slightly higher with a positive green arrow with TIF signal, that's where I might be looking to enter, with the expectation that the counter would actually be able to break its last high, which is at the $76 level, given all the positive news flow, given the fact that Warren Buffett has been positioned pretty heavily in this counter. So again, not quite out of the woods at this point of time for this counter, but definitely something to take a closer look at if the price does trend slightly higher and there's actually a positive signal for entering. Okay, so you can actually go through the list over here and see which are some of these stocks which might be the best position. Like let's say FANG, for example. I think FANG, the stock is not found over here. It's not found over in the NYSE, but more on the NASDAQ side. So we can actually go to, again, briefly on the NASDAQ side, screen by sector, and take a look at energy. Okay, FANG over here. No wonder we cannot find APA because it's also under the NASDAQ side. So you can see 0.0 bearish. So still at this current juncture, looking like a nice rebound, potential rebound, but not yet. So be patient. Same thing with FANG. Okay, the mode is on bullish, so this is slightly more positive, but at this current juncture, it is still, I would say, whipsawing within this tight region, and I want it to be kind of like breaking above the near-term resistance of about $150 level before I'm a bit more comfortable in its uptrend. So this is one counter to be looking at as well. So hopefully I've given you guys some nice insights on which are some of the counters to be focusing on, oil related counters to be focusing on. Now the last portion comes down to execution, which is using options. In my opinion, I think this is great for using options. So we have identified at this current juncture, MRO is one of those stocks whereby it is the right stock to be playing the leverage price movement of oil, and it is also at the right time, potentially at the right time. So I will put up so this is basically the heat map. Based on last time, you can see energy is the only one that is super green. Healthcare has also been doing pretty well, but energy is doing fantastic last evening. Now, coming back to MRO, price increased by 10% overnight, the strongest performer of all the oil-related plays in the S&P 500. Now, I'm looking to structure an option trade. The key purpose over here is to minimize my risk as much as possible because the movement of MRO can be quite volatile. You can see over here that the beta of MRO is at 2.5, so it's actually quite volatile. So I don't want to be risking too much. So over here, the goal is not to risk too much. Now, the first thing first is to select a time horizon. And I've earlier mentioned that typically from trough to peak, the duration is roughly about 3 to 4 months. So we want to be looking at somewhere around, I would say, 4 to 6 months of time horizon. So I would say a good time horizon for this kind of trade that I'll be looking at to execute on is on 15 September 2023, about 165 days. Almost close to half a year. So I think this is a good time horizon to be looking at. Okay, and then I would again be looking at single stocks. I'll be looking at call options over here, and I'll be looking to execute with the goal of reducing my capital outlay as much as possible. Okay, so I would say that, I will not be going into details how I'll be structuring it. This is something that I'll be talking to my option students during the hand-holding session, upcoming Wednesday hand-holding session. But suffice to say, I'll be looking at somewhere around here. Okay, suffice to say, I'll be looking at somewhere around here whereby I will not be risking too much capital. Now, in this case, let's say if I were to select, for example, if I were to select a strike 30 option, call option, whereby the liquidity is quite substantial. Okay, what I'm doing over here is that I'm paying only $169. Okay, $169 to have exposure to 100 shares of Marathon Oil Corporation, whereby if you buy the shares in itself, it's going to cost you roughly about $2,600. So this is just a small fraction. And of course, my expectation is for the share price to rally quite significantly, assuming that oil price does indeed continue its upward price movement trend. Okay, so I'm not risking a lot. And if I'm wrong, at the end of the day, if I'm wrong in terms of my expectation, my costs or my outlay or my risk is not that substantial. Okay, so again, this is something which I would personally be looking to execute on, okay, for oil related plays. A quick pun on that basis, but this is basically, I would say, a more educated pun, so to speak, using fundamental data, price action data, as well as using some of these timing factors, using your trader's GPS platform to guide you on which are the stocks to be looking at this current juncture. And last but not least, in terms of structuring, how to actually structure a trade whereby you don't risk too much but yet have that potential symmetrical or asymmetrical upside, where your reward potential can actually be quite substantial if you are right in your expectation. Okay, so with that, thank you very much for listening or tuning into this video. I hope that you have learned something from this video, and do look out for my next sharing session, which is, I would say, coming soon as well, sometime in mid-April. So I'll highlight to you guys more on that webinar session. Okay, with that, thank you very much, and I'll see you guys soon.